Welcome to Illuminati Silver. We tell the truth about silver. Today is Tuesday, the 8th of December, 2020. And we're looking at silver. Why Peter Krauth, contributing to Kitco, believes silver is likely to move higher in the next couple of weeks. And a second article by the Silver Institute highlighting that although silver jewellery demand is down significantly this year, this will correct over the next few years. And as it represents 20% of silver demand, it's a trend one has to take notice of. So let's take a look. Yesterday, we produced a video entitled "The Greening of Black Gold, Implications for Gold and Silver." And in this video, we highlighted why energy costs for gold and silver mining could rise short term, but may prove beneficial in the longer term. And we've placed a link to this in the description box below. Now today, we're looking at an article published, firstly by Kitco and written by Peter Krauth, expressing why he believes silver is likely to rise in the next couple of weeks. So let's take a look. Kitco news article dated 8th of December by Peter Krauth. Headline: Silver is back. It's getting harder with every passing day to find cheap assets. Stocks, bonds, real estate, they're all pretty pricey, and yet no one seems to care. Instead, the masses and asset managers appear determined to keep pushing them higher. In recent days, the S&P 500, the Dow 30 and the Nasdaq all set new records. And yet it's not difficult to imagine that at least over the next 6 to 12 months, these indices could easily all head higher. It's a classic melt-up scenario. We have all the right ingredients in place. Even more big stimulus is likely on the way before long. Unemployment and home prices are stubbornly high, while real interest rates remain firmly negative. But through all of this, precious metals, and silver in particular, look irresistibly cheap. Silver's macro environment. I have to say I can hardly blame investors for pushing asset prices higher. After all, the two Feds, the Federal Reserve and the federal government, are a determined bunch. It's easy to see why. Some important relief programs expired this past summer, including a $600 top-up for unemployment benefits and a loan program for small businesses. The $1,200 stimulus checks are feeling like a distant memory, and other temporary aid will end this year. Meanwhile, small businesses are struggling. According to Opportunity Insights, there are 29% fewer open small businesses than in January, and less than at any time since the month of May. And unemployment is persistently high, particularly for those in lower wage categories. November saw just 245,000 jobs added to the US economy versus the 610,000 in October. Since the start of the pandemic, the US has lost nearly 10 million jobs. Right now, Congress is working on a bipartisan program which could include an extension to unemployment benefits and a possible second loan to small businesses stemming from the Paycheck Protection Program. So with the prospects for a lot more helicopter money ahead, Janet Yellen, as the next Treasury Secretary, must be dusting off her pilot's license. In the meantime, asset prices continue to soar as negative real rates abound. The S&P Case-Shiller US National Home Price Index is 70% higher than it was in 2012. And real interest rates have now been below 0% most of the time since late 2007. I expect that these trends to remain entrenched and even continue as we move forward. Bullish metrics. In my view, as far as investment assets go, silver still remains amongst the most undervalued. But that's unlikely to last. Let's look at it from a few perspectives. When compared to gold, the silver price has a lot of catching up to do. Notice that in both 1980 and 2011, silver's percentage gains were markedly higher than gold's, easily outpacing the yellow metal. And if you peer over to the right end of the chart, we can see that silver has clearly a lot of catching up to do. On an inflation-adjusted basis, silver also looks dirt cheap. Note that when it topped in 2011, even when accounting for the low-balled consumer CPI, silver never even achieved half its adjusted 1980s peak. And right now at $24, it's only a fifth of those levels. I'll stop there for 1 second. We have to bear in mind that the 1980s peak was an artificial, manipulated peak. Just bear that one in mind. This is where I think there is a flaw in this assessment, because it's basically saying that on an inflation basis, silver should be $120 when the peak in reality was $50. But that was a manipulated peak, and therefore not through natural consumer supply and demand. Anyway, let's move on. More recently, silver peaked at $29 in August and has been on a 4-month correction since. The price has mainly held above $23 after testing that level 3 times. The 50-day moving average has been flattening out, and silver's just popped back above that level. At the same time, both the RSI and MACD have been trending higher since silver's first test of $23 in late September. Looking at silver stocks, the overall picture is similar, if slightly less convincing. SIL has dipped lower to test its mid-July breakout at $40, and here too the RSI is trending higher, but the MACD put in a slightly lower low in late November. Meanwhile, the 50-day average has also flattened out, and SIL is now challenging that level with room for momentum to push higher. What to do next? At this juncture, silver's looking pretty bullish. We could see it chop back and forth for another week, maybe 2. But with the next Fed meeting on the 14th to 15th of December, I think the setup is looking increasingly positive. If you don't own any silver, now looks like a great time to layer in, buying in regular intervals over the next weeks or months. If you already own some silver or silver stocks, but feel like you need more, the same applies. Start buying, but split your allocation into a few tranches. That will help smooth out your purchase cost. Just consider, of all the assets out there, silver looks amongst the cheapest by several metrics, and that helps mitigate risk while diversifying your portfolio. Caution: silver is heading into a massive bull market. Large gains, coupled with volatility, lie ahead. Peter Krauth, contributing to Kitco.com. Well, it seems certainly plausible, and we all know that moving into a new year generally, based on past experience and performance, means precious metals are likely to move higher. What interests us more, though, is the medium to longer term. And as we have frequently stated, the 2020s will be the decade for precious metal prices. Indeed, we have the likes of Jim Rogers stating recently that he expects equities to continue to rise, certainly short term. But when they do eventually fall, they will, quoting him, provide the biggest collapse of his lifetime. Now, many hedge fund managers also believe that equities will have a very positive 6 to possibly 12 months, but undoubtedly we're looking even a little beyond then. Now, today the Silver Institute has published a report by Metals Focus stating that silver jewellery demand, while subdued this year and down a fair amount, will pick up in 2021 and looks to have a most rosy future moving into the mid-2020s. And we do not disagree. Let's take a look at this article. Silver Institute article dated 7th of December 2020. Headline: Global silver jewellery market impacted by pandemic and higher silver prices. Jewellery demand expected to reset in 2020 with forecasted increases in key markets. Silver's use in jewellery is an important demand source for the precious metal. In 2019, 200.2 million ounces of silver were consumed in this sector, which was just shy of the record high of 201.9 million ounces, posted in 2018. Although silver jewellery consumption currently accounts for 20% of total silver demand, it is projected to rise to a quarter of global silver demand by the mid-2020s, further underscoring the popularity and desirability of silver jewellery among leading designers and fashion-conscious consumers. Against this backdrop, a new publication released today by the Silver Institute's Silver Jewellery Report assesses the current state and prospects of the top silver jewellery fabricating markets, including the US, India, Europe and East Asia. The report was produced by Metals Focus, the global precious metals consultancy. The report states that the global silver jewellery market has been negatively affected in 2020 by the COVID-19 pandemic, higher silver prices in US dollar terms, and record local silver prices, especially in India, the world's largest silver jewellery fabricator. While global silver jewellery demand is projected to fall by 23% in 2020, silver jewellery demand is expected to bounce back in 2021 and is likely to see a 13% recovery, despite anticipated higher silver prices, primarily due to the forecasted economic recovery, which should offset higher silver prices. Of note, projected losses in the gold jewellery sector in 2020 are even steeper, currently anticipated to fall by 33%. This reflects the impact of the pandemic and record high gold prices, especially in price-sensitive jewellery markets. Key takeaways from the report. United States. Jewellery demand is expected to grow by 10% in 2021, primarily due to a recovery in consumer spending, offsetting the 10% forecasted loss in 2020. The longer-term outlook is for steady growth to emerge, primarily due to steadier economic expansion, with record levels of silver jewellery consumption achieved by the mid-2020s. India. Demand in 2020 is projected to fall to a 7-year low, driven by economic weakness, record domestic silver prices, and the pandemic. However, 2021 is forecast to see a strong recovery, and the outlook beyond 2021 is promising as the Indian economy improves, coupled with rising consumer confidence and as the market increasingly embraces higher purity sterling silver jewellery. Europe. European silver jewellery demand is forecast to fall by 17% in 2020, though next year's forecast calls for a rebound of 14% as retailers rebuild stocks and consumption starts to return to more normal levels. East Asia. After this year's expected 17% drop in silver jewellery demand, East Asian jewellery fabrication in 2021 is expected to strengthen, as a recovery in both the Thai and Chinese jewellery markets will fall just short of 2019's pre-COVID levels. Looking beyond 2021, the report maintains that global demand for silver jewellery is on track to achieve further successive gains, benefiting from increased demand in every major market. Key to this will be the impact of an improving global economy and the benefit this will bring to disposable incomes. End of article. So today we've presented two very bullish pictures for silver, both short-term and medium to long-term. And yes, the contributors may be wrong, but there is no escaping the fact that silver is undervalued when compared with previous highs. But as Jim Rogers has also put it recently, so is sugar. Totally undervalued. But fortunately for us, silver has a much longer shelf life. What do you think? Are prices going to rise in the next couple of weeks, or are they going to fall back as some others predict? And are we going to see a recovery of the silver jewellery market perhaps as quickly as Metals Focus predicts? Do share your thoughts, and meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.